Buying a home can seem daunting, especially if you're a first-time home buyer. This will likely be the largest purchase you've ever made. For the biggest purchase of your life, you should be prepared and understand what to expect during this process. While this is a complicated process, I want to break it down into easy to understand steps for you to take as you start this journey. First, check your credit score and credit report. While you can get approved for a Federal Housing Administration or FHA loan with a 580 credit score, you should aim for something higher. Your credit score will determine your interest rate. The higher the score, the lower the interest rate. A higher score can save you tens of thousands of dollars in interest compared to a lower score. Do not rush this process. While underwriting procedures will be different from lender to lender, it is a good idea to make sure your credit report meets these requirements. Have no late payments in the past 12 months, no unpaid collections on your report, and have at least 3 to 4 trade lines or loans and credit cards that have 12 months of payment history. Once your credit is in shape, you should make sure that you have proper savings. This is the part that typically sets the timeline for when you can buy a home. For a lot of first-time home buyer mortgage products, your down payment will typically be between 3% and 5% of the cost of the home. Plus, you'll need another 2% to 6% for closing costs. To use an easy round number, let's say you want to purchase a home for $100,000. That would mean you need $3,000 to $5,000 for down payment and another $2,000 to $6,000 for closing costs. So in total, you'll need between either $5,000 to $6,000 saved up before you would want to talk to a lender. There are plenty down payment assistance options for home buyers, and you should apply to those if you are eligible. Down payment assistance is great to use, but you shouldn't depend on it, as that money may not be available when you need it. As you're getting closer to when you want to apply for a home, sit tight. Do not take any major changes in your life. Don't switch jobs, buy a new car, or apply for a credit card. This is a very sensitive time for a buyer. So before you do anything, remember that you don't want to mess things up with your credit score or with your future lender. Once your credit report and score look great and you have ample savings, it's time to start comparing mortgage rates and fees. Shop around for mortgage lenders and compare 3 to 5 different quotes. The Consumer Finance Protection Bureau recommends requesting loan estimates for the same type of mortgage from multiple lenders to compare costs, including interest rates and possible origination fees. After you've decided which bank and mortgage product you'll go with, you'll need to get a pre-approval letter. This lets home sellers and real estate agents know that you are serious. The pre-approval letter may tell you the highest amount of home that you can afford, but don't be tempted by that high number. Stick to your budget. Set a price range that is based on your budget. If you know that you could only afford to spend $800 a month on a mortgage, don't look at houses that'll end up costing more than that. For more information on owning a home, visit the Consumer Finance Protection Bureau's website. There it will take you through preparing to shop, exploring loan choices, choosing a loan offer, and getting ready to close.